If you're an investor, you need to know the truth. 2025's financial winter: fact or fiction? Predictions are swirling. Join me as we uncover if a financial chill is really on the horizon this year. Don't miss out. Remember to like and subscribe for more Money Smart Basics videos. Stay until the end to receive a bonus tip. If you have any suggestions for financial literacy topics, please leave a comment. Look in the description below for wealth building tools and income opportunities. In the popular TV series Game of Thrones, the phrase "winter is coming" sent shivers down everyone's spines. It meant hardship and struggle. This powerful message translates directly to our financial lives. Just like the characters in the show, we need to be ready for financial winters. Economic downturns are like those harsh winters. They are a natural part of the economic cycle. Ignoring these cycles is like pretending winter won't arrive. The good news is that we can prepare for these financial winters. Just like a warm coat protects us from the cold, a solid financial plan safeguards our future. The global economy is like a giant, complex machine. It goes through cycles of ups and downs. Think about the natural seasons. We have spring, summer, fall, and winter. Each season brings its own unique characteristics. The economy is similar. We have periods of growth, peak performance, slowdown, and recession. During a downturn, things might feel uncertain. You might see news about job losses or market instability. Just like winter eventually gives way to spring, the economy will recover. By understanding the cyclical nature of the economy, we can anticipate challenges. When we're prepared, we can face any financial winter with confidence and resilience. Just as nature experiences cycles of changing seasons, the economy also goes through its own distinct phases. These phases, much like spring, summer, fall, and winter, are characterized by different economic conditions. Imagine a period of economic spring. Businesses are blooming, jobs are plentiful, and people feel optimistic. However, just as summer inevitably transitions into fall, the economy will eventually experience a slowdown. This is a natural part of the cycle, a time when growth moderates and things cool down. The key takeaway is that economic cycles are a natural phenomenon. By understanding this, we can better prepare for the inevitable downturns and position ourselves for long-term financial well-being. When a financial winter sets in, its effects ripple throughout the economy, impacting businesses, individuals, and communities. Companies cut costs by laying off employees. Unemployed individuals spend less, reducing demand for goods and services. Investors become risk-averse, seeking safer assets. History is replete with examples of economic downturns, each offering valuable lessons for navigating future financial storms. By studying these past events, we can gain insights into the causes, consequences, and potential strategies for weathering economic uncertainty. The Great Depression of the 1930s taught us the importance of government intervention and social safety nets during severe economic crises. The 2008 financial crisis highlighted the risks of unregulated financial markets and the need for prudent lending practices. By learning from the mistakes of the past, we can make more informed decisions about saving, investing, and managing debt, building a more resilient financial future. Just as nature gives us clues about the changing seasons, the economy also provides signals of potential downturns. These signals are called economic indicators. They are like weather vanes pointing towards potential economic shifts. By paying attention to these indicators, we can make informed decisions about our finances. One key indicator is inflation. Inflation is a sustained increase in the general price level of goods and services. Another important indicator is market volatility. Markets, like the stock market, are always fluctuating. However, rapid and extreme swings can signal instability. By staying informed about these indicators, we can make better financial decisions. Inflation is a silent thief that can chip away at your hard-earned money. When prices rise, your purchasing power decreases. This means you need more money to buy the same goods and services you did before. Imagine your money shrinking in your wallet. That's the impact of inflation. Let's say you've been saving for a new car. However, due to inflation, the price of the car has increased. Now, your savings won't get you as far as you had planned. If your investments aren't growing at a rate higher than inflation, you're actually losing purchasing power. By staying informed and making strategic choices, you can mitigate the impact of inflation on your finances. Market volatility is like a financial roller coaster, with smooth sailing followed by sudden drops and sharp climbs. Extreme swings can impact your investments. Imagine you're on a roller coaster. A sudden steep drop can be unnerving. Similarly, a sudden plunge in the stock market can be concerning. Picture a sturdy fortress, built to withstand any siege. That's the image we want to create for our finances, especially when preparing for a financial winter. Just as a fortress has strong walls and ample supplies, our financial fortress needs key elements to weather any storm. The first element is an emergency fund. This is our safety net, our reserve of cash for unexpected events. Job loss, medical emergencies, car repairs, life throws curveballs. An emergency fund helps us handle these situations without derailing our finances. Next, we diversify our investments. Imagine putting all your eggs in one basket. That's risky. Diversification is about spreading our investments across different asset classes like stocks, bonds, and real estate. This helps reduce risk and protect our portfolio from major losses. Relying solely on a single source of income is like having a single oar to row your boat. If that oar breaks, you're adrift. Diversifying your income streams is like adding more oars. It gives you more stability and control, especially during turbulent economic times. Think about developing new skills or exploring side hustles that align with your interests. Passive income streams like rental income or earnings from a blog or online business can be particularly beneficial. By diversifying your income, you create multiple streams of revenue, reducing your reliance on a single source. In a world of instant gratification and online shopping, it's easy to overspend without even realizing it. But mastering your spending habits is crucial, especially when preparing for a potential financial winter. Small changes in your daily habits can make a big difference over time. Start by tracking your expenses. Where does your money actually go each month? You might be surprised by how much you spend on things you don't really need. Once you have a clear picture of your spending, identify areas where you can cut back. Small adjustments can free up significant cash flow. By making conscious choices about your purchases, you gain control over your finances, reduce financial stress, and build a more secure future. Knowledge is power, especially when it comes to our finances. Financial literacy gives us the ability to understand and control our money. Imagine having a financial GPS that guides you towards your goals. We're empowered to take control of our finances and achieve our goals. Financial ignorance can be a vicious cycle, passed down from generation to generation. If we don't learn about personal finance, we're more likely to repeat the mistakes of the past. The good news is that this cycle can be broken. By prioritizing financial education, we can empower future generations to make smarter financial decisions. Investing in your financial future is not just about putting money into stocks or bonds. It's about investing in yourself, in your financial knowledge, skills, and habits. It's about making a conscious decision to prioritize your financial well-being. Imagine your financial future as a garden. You need to plant seeds, nurture them, and tend to the garden regularly to reap the rewards. Financial education is the fertile soil that allows your financial seeds to grow. Start by exploring the wealth of resources available online, at your local library, or through community organizations. Read books, listen to podcasts, attend webinars. There are countless ways to expand your financial knowledge. Don't be afraid to ask questions. Investing in your financial future is a continuous process. When a financial winter descends, it can feel isolating, like facing a blizzard alone. However, it's during these challenging times that the strength of a community truly shines. Just as a warm hearth brings people together for warmth and support, communities can rally together to navigate financial hardships. Imagine a neighborhood where neighbors help each other shovel snow after a heavy snowfall. Similarly, during economic downturns, communities can create support systems, sharing resources, information, and skills. By fostering a spirit of collaboration, empathy, and collective action, We can weather the storm together and emerge stronger on the other side. Just as winter gives way to spring, financial downturns are followed by recovery and growth. By staying resilient and adapting, we can emerge stronger. Think of a tree weathering winters. Each spring, it renews with vigor. Each challenge adds to our resilience, equipping us with valuable lessons. Innovation often flourishes in tough times. Remember, the darkest hour is just before the dawn. We can navigate financial winters and emerge into a brighter spring. Financial winters, like real winters, are a part of life. They can be challenging, but they are not insurmountable. By understanding the cyclical nature of the economy, recognizing the warning signs and taking proactive steps, we can weather these storms and emerge stronger. Remember to build a strong financial foundation. Create an emergency fund, diversify your investments and reduce debt. Explore additional income streams and master your spending habits. Knowledge is power, so invest in your financial literacy. Seek guidance from experts when needed. Most importantly, remember that we are not alone. Support your community and be there for others. Just as spring follows winter, economic downturns give way to recovery and growth. By embracing resilience, innovation, and collaboration, we can create a brighter financial future for ourselves and generations to come. Congratulations, you made it to the end of the video. With that, you are ahead of 90% of most people in America. Here is the bonus tip that we promised. Hold on. You can't afford to miss this. Experts predict a major shift in global markets within the next year. Stay ahead of the curve. Prepare now and secure your future. Click the link to learn more. The information in this video is for educational and entertainment purposes only, and is not intended as financial advice. We are not financial advisors, and the content should not be construed as professional financial advice. Always seek the advice of a qualified financial advisor or other professional regarding your specific financial situation. The use of any information provided in this video is solely at your own risk. Please remember to like, subscribe and comment for more Money Smart Basics videos.